Hello and welcome to this very special show. This year marks 20 years since Mukesh Ambani took over the reins at Reliance Industries and the transformation of the oil to telecom giant under his leadership. We're going to discuss various aspects of this over the next 30 minutes or so. I'm Prashant. With me, my colleagues Reema, Lata and Sonia are standing by on the big wall as well. I have to, before we kick it off, wish Lata a very happy birthday as well, Lata. Happy birthday.
And she shares her birthday with a lot of other big names.
Oh yes, Dhirubhai Ambani himself.
And Ratan Tata?
Ratan Tata, Arun Jaitley and the Indian National Congress. Their first meeting was on 28th.
And they must also be saying that we're in good company. So happy birthday, Lata.
Thank you. Thank you. It makes you feel how small you are. Others have achieved so much. Anyway, go ahead, Prashant.
Well, so let's set this up, right? Sonia is standing by on the big wall to walk us through Reliance's landmark journey under the leadership of Mr. Ambani over the past 2 decades. Sonia, over to you.
Well, the year 2022 marks 2 decades of Mukesh Ambani's leadership at Reliance Industries. So we take you through his journey and the exponential growth the group has seen over the last 2 decades. Let's throw it way back to July 2002 when 45-year-old Mukesh Ambani took over Reliance Industries after the demise of his father, late Shri Dhirubhai Ambani. Since then, Reliance has achieved consistent and strong double-digit growth. The market capitalization of Reliance rose at an annualized rate of 20.6% in the last 20 years, rising from 41,989 crores in March of 2002 and now standing at a whopping 17.82 lakh crores in March of 2022. In fact, we've put together a table of the key financial parameters and how most financial metrics have seen high teens growth in the last 2 decades. If you look at the table here, the revenues and net profits have risen 15 to 16% on an annualized basis over the last 20 years. And if you go through the rest of the table as well, exports, assets, net worth, all cumulatively rising anywhere between 16 to about 19 odd percent. That's the kind of growth that we've seen under the leadership of Mukesh Ambani. But the gains are not for the group to enjoy alone. Reliance has successfully and consistently generated wealth for its investors. It added 17.4 lakh crores to investor wealth in the last 2 decades alone. That would be an addition of 87,000 crores to investor wealth every year. Also, Reliance has displayed agility and relevance by investing in new and upcoming businesses. Reliance's E&P business made its first hydrocarbon discovery in late 2002 and production started in 2009. Reliance Retail started operations in 2006 and the breakthrough came in 2016 when Reliance entered the highly competitive telecom industry. Reliance Jio started operations in 2016 and this led to the cost of data per GB falling from 500 rupees in India to 12 rupees post the launch of Reliance Jio. Not just that, India's ranking in broadband data consumption moved from 150 in 2016 to number 1 in 2018. This at a time when traditional refining and the petchem business continued with its expansion. From a single refinery in 2002, Jamnagar is now the world's largest single location refining complex. Reliance has added some of the world's largest downstream units to its book as well, setting up the world's largest refinery off-gas cracker, Jamnagar, and added the world's largest petcoke gasification unit.
Well, Sonia, thank you very much. That's a very comprehensive look at the journey of Reliance Industries and what a journey it has been. You know, I must say that I visited the Jamnagar refinery sometime, I think it was in 2005 or 2006, and it's a sight to behold. I mean, it's just a dazzling, spectacular city. I mean, actually, it is a city. You know, you realize the scale of these things. I mean, we talk about refineries and, you know, petrochemical units, etc., but it's just something to see, to believe in. And of course, as Sonia pointed out, the next one came up later, was commissioned, I think, in 2008, 2009 as well. So, you know, but I've only looked at Reliance for the last, 17, 18 years. But let's get someone who's looked at Reliance for much longer than that, a veteran really. Manish Chokani of Enam Holdings is with us. Manish, great to have you with us here. Thank you very much. You know, it's a spectacular journey, as Sonia pointed out, and so many industries now, right? And newer getting added pretty much every couple of years. The latest push, of course, is in Reliance Retail in a very large way. Your first thoughts?
Well, Prashant, first of all, thanks for having me. It was probably more appropriate to have Vallabhbhai here, who's on a flight. You know, he spent a lot more time with them. I was, of course, fortunate. I started, I don't know if many people will know, I was the first analyst covering Reliance way back in 1991. when they were just going to launch their GDR issue. And just to supplement what Sonia said, I think the profit of Reliance in that year was 150 odd crores, which is, at that exchange rate, $50 million. And from that $50 million to be at a $10 billion plus run rate of profit where they are today is just a staggering journey. It's 200 times in the span of this 30 years. And whatever one says about Mukesh Ambani will be, I think, limited, because what his achievements are and where he's led this company to, even before taking over as CEO, as you said, if you think of the refinery which was put up and all the petrochemical units which also came up and transformed Reliance from what was essentially a polyester and a PTA producer to petchem, and then to refining, and then onwards to E&P. And now eventually they will get into green hydrogen and so on, and transform the energy landscape of the country. It's just a staggering journey. And how the late Dhirubhai would say, we have to change orbits each time and not be satisfied in the orbit one has reached. So I'm just in awe and complete admiration for both the company and the person who has led it over the last, more than 2 decades now.
Manish, actually, I wanted to start off at that point. Do you know of any other company that would be actually captive to commodity cycles if it was only petrochemicals, and then so neatly moved into cutting-edge mobility, communications, and then it could have been, there are many telecom companies which would have been just a utility, and then you so smartly convert that into using that utility for FMCG, retail, etc., cutting-edge use of the internet. Are there any other instances? I mean, it's a dramatic transformation.
Well, Lata, I've said this before in one of your interviews. I think it may have been even 20 years ago, if I'm not mistaken, that in a nation's history, sometimes you get a Rockefeller, sometimes you get a Carnegie, sometimes you get, a JP Morgan. And we've been fortunate in a sense to get all this combined in one entity called Reliance in India, where they've constantly, changed, as I said, the orbits and gone to newer and newer things. With, at the heart of it, what my learning is, they've always operated on first principles, and they will drill down to actually the lowest atom of or unit of production, if I may call it that. And while, of course, Geo launch is shown on your chart as 2016, I remember working with them on what was the earlier avatar of Geo, which was Reliance Infocom, which is the 2001-2002 vintage, when again the vision of the company and the person was really to transform the way telecom was conducted. And they were clear even then that voice is history and it will be data, as far back as 2001. And Dhirubhai had actually said we must get this down to the cost of a postcard. And that was really the mission with which this was approached. So again, while you're thinking of it as moving from commodities to new age businesses, I don't think if one would go and examine the way the Reliance refinery was built, with the fluid catalytic cracker, with the gas cracker, and you would not have been able to produce a lot of the products which come out at the top of the refining barrel, taking the worst crudes in the world and transforming it over here, if they hadn't had that complete grip over technology. So whether it was taking PTA when DMT was the prevalent technology, which Bombay Dyeing was running in those days, whether it was going down the route of CDMA when GSM was the prevalent technology, or indeed today, when we are sitting and already using 5G, much ahead of rest of the world, it's really because they've worked on first principles. And at two ends of the spectrum, if you think of it, if we did not have the Reliance refinery, and they're probably now a third of all refined capacity in India, we would not be moving the way we are currently, and especially with what's going on in the geopolitical arena and from where they're sourcing routes and creating. And at the other end, think about in COVID, we would have shut down if it wasn't for really Geo, which provided bandwidth for the whole country to operate. And looking ahead, again, we've spoken on one of your earlier shows about the 1-1-1 aim which has been put out for the green hydrogen, green energy initiative, which can again be transformational for our country by the end of this decade. So just like, as I said, complete awe and admiration for the level of thinking, the vision, the detailing, and the sheer class of execution on beyond world scale, which they managed to execute.
Jio has heralded India's digital journey, right, by providing connectivity to one and all. And that has given rise to so many unicorns, so many companies which are riding on, Jio's connectivity to everyone in India. So that has truly been a game changer. Manish, but under Mukesh Ambani, he seeded so many business, right? Jio's one, retail, now new energy. There's financial services, which is soon going to be listed as well. Which one are you most excited about, which can be transformational in the next 10 years?
Rima, the thing is with Mukesh Ambani, you be excited about Mukesh Ambani because whatever he touches is gold. And, there was a very famous AGM where the late Dhirubhai was conducting affairs. And a shareholder got up and he said, and I won't say it in Gujarati, but he basically said, if Dhirubhai will dig, you will find oil. Because he had that knack. I think Mukesh Bhai has that knack that whatever business he chooses to enter, he does it very, very thoughtfully with his team, Manoj Bhai and others, all fantastic leadership team which has been built over there. His knack for building people, building leaders in the company, empowering them, keeping the leadership team very young is just outstanding. And therefore, there's no one business because it works together as, how shall I say, a constellation of stars. That Jio is made more powerful because of its retail. Retail is made more powerful because of its broadband. The financial services will obviously be a play alongside with what has been created on the retail side and so on. So I don't think one should try to strip the elephant and see whether the trunk is better or the leg is better or the tail is better. This is an elephant which is a powerful elephant and moving really, as you said, with the agility of a tiger. So it's a very rare combination, and we are lucky in India to have witnessed the journey of this company and excitement about what lies ahead for them.
Oh, absolutely. Manish, this is Sonia here. It's not just created wealth for their own group, right, but also for shareholders. I mean, I was going through a recent study that Motilal Oswal put out for 2021, where they said that Reliance Industries has created 10 lakh crores for shareholders in the last 5 years, the largest by far that any group has created in terms of wealth for its shareholders. Do you think that it can keep this legacy intact over the next 5 to 10 years, given how dynamic the environment is?
Sonia, I'm of course a votary of the company, so you're asking someone who's a deep admirer. And like you yourself pointed out, if you compound it at 20% per annum for 20 years on larger and larger incremental capital, it just tells you of the propensity of, knowing where the puck is going to. So while we in the markets may look 2, 3, 4 years ahead, here is someone who's used to looking 10 years ahead. And I remember a meeting where he famously said that, if the profit I make is, let's say, 100 rupees in a year, I will make 400 over 4 years and I can lever it, say 0.5:1. So I need 600 rupees of projects at any given time for what we are going. And only at that pace can one keep on compounding. And if you look at them, I think even today, the projects on the anvil are, if I'm not mistaken, already about $75 billion, which are already announced and under implementation. And when they put $1 of investment in, they know how to create $2, $3, $4 of market value from that. So from a $200 billion, whatever market cap we are today, if that 75 billion gives you the next 150 or 200 billion, you can already see a doubling of the trajectory of where this company is headed. So yes, short answer to you is yes. I remain confident about what they will achieve in the coming years.
Okay, Manish, what do you think is going to be the trump card going forward? Because, look at the number of acquisitions. I just can't remember. I don't know if we'll be able to even put them all into perspective. Just Dial most recently, before that, Savin, Hamleys.
Metro is the most recent one.
Metro, the most recent one. And so many smaller companies in, AR, in cutting-edge software technologies. What do you think Reliance is going to look like? Will it be a software leader? Will it be a retail leader? Will it be a green energy, green hydrogen leader? What's your best guess?
Lata, I think the way to look at it is that Reliance has transformed into a conglomerate. So while we think of it as one company, it's more useful if you think of it as, say, the Tata Group. So it's not like in Tata when you say that, oh, they're making trucks and they're also doing software and they're also doing, consumer products in the erstwhile Tata Tea. It is something which, because the missing skill in emerging markets like ours is really management bandwidth. So while in the US you may go very deep because markets tend to be deep, here our consuming economy is still fairly narrow at the top of the pyramid. And therefore you can't really necessarily go very deep because per capita income really falls dramatically once you've crossed the first 28th percentile of Indian consumers. And therefore you can use that expertise to go across various verticals. And because they work with first principles and they're not aping what someone else has done in US or what someone else might be doing in India, that's what we call the changing of orbits and the agility with which you can conquer sector after sector. And they've also had the vision to do things which are meaningful in size, and not taking small bets and trying to extract the juice out of for example, you could have said I'll go in paper and I'll put up a cement and so on and so forth. But at the scale at which they are, the bets, if you think of it, a lot of the acquisitions you say are really string of pearls, completing the array of product offerings or consumer offerings that they have, for example, in retail or around the broadband cluster, and now with finance, which also will feed in really to your retail and consumer finance cluster. And the big bet for the company now, obviously, is transforming the old energy into the new energy, where you'll get the solar power, the hydrogen, and the battery technology coming together to hopefully transform not just for Reliance, but also India's energy landscape. So I think it's useful to think of it as really that conglomerate, going down 3 or 4 different fronts, but eventually converging around the consumer in India, who will need energy, who will need shopping, and who will need financing, with retail kind of being the front end for all of us.
Okay, just a here and the now question. I mean, since Lata brought it up about what the future could look like, do you see more monetization avenues for Reliance Industries? Of course, we've been talking a lot about how Reliance Retail is looking to list overseas. There's that full game plan, in motion now. But from a shareholder standpoint, what are the other monetization avenues according to you?
Sonia, there's just so many things. They are the people who taught us all finance. They are the people who actually created the capital market in India. So, where you get value from investors, like they showed in bringing in people from Geo, because you may have had a longer lead time in producing an IRR in the underlying business. And if you can bring in investors who pay you that top dollar and share your kind of outlook for 5, 7, 8 years, I think that would make eminent sense. They've historically only gone and raised after the execution risk, in a sense, is out, because that's when you really attract top dollar. So yes, all of these, whether it's retail, I think at some point in the future you will see, I think, someone coming in on the whole energy platform as well. But again, I'm no one, anymore working with them, so I have no deep insights into what the current thinking is. But there are so many assets sitting inside which are monetizable, and the sum of parts is surely greater than what we all are able to perceive and see today, because there is already on the side the Reliance Life Sciences and so on, so many other initiatives happening inside, which one will not even be aware of, as a public investor.
You spoke about the sum of parts being greater. Manish, one of the big differences between Reliance Industries and Adani, the two powerhouses of corporate India, is that the Adani Group has multiple listed entities, while Reliance Industries up until now has only one listed entity. I know they have plans to list some of the other businesses, but they've been slow on it. Do you see that changing in the next couple of years? And your thoughts on the fact that they've decided to keep all the businesses, diverse businesses, under one entity as of up until now?
So, see, there's no right or wrong answer. And again, a lot of what Mr. Adani has done is again incredible, and what he's created, and again their national assets, is fantastic. But to give you the analogy, there are a number of companies listed within, say, the ICICI Group. And there are no companies listed in the Kotak Group, and both are fantastic companies. Both are run by fantastic leaders. Both are well-creating entities, and one takes a different approach depending on one's personal style. It is obviously been a matter of great speculation in the markets that eventually each of the next generation of Reliance may get to lead one of their businesses. They may choose to say we want to do it as a separate entity, or they may choose to run it as part of a conglomerate inside. Who's to say? But like I said, there are a number of things which are separately listable, separately valuable, and it's really a decision of, do I get a greater value by putting it outside, or does it benefit by staying inside a conglomerate structure? And it's the classic debate, right, from 1980s, which Michael Porter and Michael Jensen and all used to talk about. That is there value of staying inside because you get patient capital and more long-term kind of view on things, or do you take them outside and expose them to the vagaries of the market and try and see if you can extract top dollar from that? So time will tell. I don't think there's a right or wrong answer over here.
Oh yeah, that's very well put. 2 points. We were just looking at data on Reliance Retail. Each of the businesses of Reliance Retail is much larger than, companies in that. Like for example, in groceries, Reliance Retail is much larger than a D-Mart. In retail, in fashion and retail, it's much larger than other listed companies which just do that. So within each of these companies, each of these businesses, the size is very, very large. So absolutely a conglomerate. And the other point, Manish, which you always emphasize, and maybe not enough credit is given, is the fact that they put top capable people to run the show, right? I mean, the depth of management is there, which I think is so important for such a large group, and they've been able to create that. Thank you so much, Manish, for joining us. It's a pleasure having you with us here and sharing those insights and your sort of experience working with the group at one point, and of course, what you see has panned out. Well, we'll take a quick commercial break here. We are back. We continue this discussion with other veterans of the market. Stay with us.
Welcome back. This year marks 20 years since Mukesh Ambani took over the reins at Reliance Industries, and under him, we've seen the company transform, expand its oil business and get into so many new businesses like telecom, retail, new energy. We've been discussing the transformation of Reliance Industries, the great heights Reliance Industries stock price, the company, its financials have soared too. And to continue the conversation, we're now joined by Prakash Diwan. He's also been watching Reliance Industry financials for how long now? Prakash, how many years since you've been tracking Reliance?
I think as long as I remember making some sense of balance sheets, I think Reliance was the first company that we started working on. And in fact, my career started with Reliance from the campus. I was part of the RPPL, RPEL projects from the campus. We were recruited. It used to be called Ilu Pilu at that point in time, very fondly by retail investors. So it's been a long journey, yes, with Reliance, not just on the capital market side, but even as a company. I also had the privilege of working on some of their AGMs at Boti Khawdi in Jamnagar, in 95, 96. I remember 2 years that I was part of that on the R&D side. So yeah, it's been a great journey, learning from them, getting inspired, and then of course tracking them very closely.
Okay, Prakash, good morning. Must be, a nightmare to value a company like this, right? Because like Manish was saying, this is like trying to find a market price for the Tata Group because it is so many companies. How did that feel? I mean, you must be undergoing that nightmare even right now.
Oh, absolutely, Lata. So, what is happening now for the last 5 years, ever since Jio came into the picture, earlier it was much simpler, as all of us know. But after Jio, every quarter, there's something incrementally changing in the face of the business, in the texture of the P&L. And now it's in fact much more complex with so many of these acquisitions which are still not in the public domain in terms of having discovered values. For example, the Metro acquisition. I mean, you only know what they paid for it and at what EV they have bought it. But when it comes to valuations, all of that gets clubbed very wrongly. So in terms of other activities, but the core business is something which you do, and that's why earlier, if you recall, when we used to discuss Reliance numbers, it was with just one analyst from your side, one team from your team. Now it's 4 of us, 5 of us who are doing it. It's Sonia, Rima, Sonal, everybody who's got to pitch in, and that's the complexity. It's no more an oil and gas play. It's in certain quarters, it's kind of so starkly retail, so starkly telecom that you just can't ignore that. So it is complex. But what's changed also simultaneously is the way the business is growing and evolving, Lata. It has given all of us a huge chance to understand those businesses right from inception, for particularly telecom. It's thanks to Jio that we've started understanding telecom so well, because we've seen it right from the start when it took off, and then every year it kind of kept on morphing into this mega consumer business that it is now. So yeah, I mean it's complex, but it's interesting. And it's always a challenge to be able to do that right and in time every time the quarterly numbers are out.
Okay, and Reliance is also well regarded for setting a very high standard of corporate governance, right? I mean, we all know that last year in 2021, they underwent this whole corporatization of different entities.
Yeah.
Each entity was created with their core strength, with professionals in order to perhaps attract investors, attract alliances, and that's a big, big green flag for shareholders. Maintaining such a high level of corporate governance. Prakash, do you reckon that Reliance could continue to enjoy the premium that it does in the market because of decisions like these, where they of course not only put a great succession plan in place last year, but corporatization of different verticals, which sort of set a high standard of corporate governance for them?
Oh, absolutely, Sonia. So, in fact, it's not just continuity of that premium, valuation that gets accorded to such clarity and such well-governed corporate structures. But, the time of the pandemic, when the fundraise happened from some of the best-in-class marquee investors for businesses that were yet to start turning cash positive or profitable in a big way, was precisely the answer to this question, saying, the world looks at Reliance as the benchmark for what a meaningfully large corporate in India could do to make itself at par or probably superior to a lot of global standards. In fact, when you look at Reliance from outside, and when you talk to people who look at Reliance from the outside world, it's so simple. They don't recognize a lot of the companies because of size and scale not being optimal. Here's a company, a business that's absolutely aligned with what is long-term investing all about. I mean, any of the businesses, if you see, comes with that with a very clear timeline, which is 9 years, 10 years, 12 years from now. I mean, there's nothing which is going to happen overnight. And to be able to maintain that kind of confidence, you need great corporate structure. You need very well governed corporate structure. So I think the corporate governance it goes hand in hand if you have to scale up and attract global capital of this nature. And then in times of crisis when capital was scarce, that's exactly when Reliance actually got the biggest chunk of its capital pay in the recent years. So you're absolutely right. That is something which will continue to not only draw premium, but will probably set the tone for the next few businesses, which could probably be spun off at some stage. I'm not sure when that happens. We're not aware of the timeline. But at some point in time, that will start making a big difference when some of these businesses will independently be going for listing. And then that's where all these structures will start getting priced into that premium valuation that you mentioned.
David Chokshi of KR Chokshi is also with us. And David, I think we've been talking about, on the air, we've been talking about Reliance at least from 2004, maybe 2005. So you're a veteran, Reliance sort of analyst veteran. We're looking back, of course, at the journey as Prakash was also talking about it, but also trying to look forward. In your opinion, for shareholders, what from here? What do you think is going to be the top trigger which unlocks further value?
Hi, Prashant. Good to have on this program. Good to have on this particular discussion with you all. I believe that if you look back into the past, quickly, take the cue out of that for the future. Every 7 or 8 years, they have launched new businesses. And they start from the petrochemical and thereafter, getting into the oil and gas exploration, even retailing business, and the geo business platform, refining business included. Each of these businesses, they would take longer time to, construct. And essentially, they are not the new businesses. They are already existing businesses, which I would think that this company has developed the habit of Indianize those businesses. They would probably, create the larger scale, looking at the size of the country, looking at the population, and create, a profitable venture out of it. If that particular thing is something called as a cue for the next round of growth that they're talking about, already something which is already launched is a renewable segment of the business, wherein we are going to see the renewable materials, we are going to see the storage business, which is coming up. And that is where probably the company is going to unfold larger part of the story. If $75 million investment commitment that they have already announced, I would rather like to believe that by the time they end up completing this particular project, the size of the investment would be far larger. And maybe taking care of the next round of growth that probably would be required. So in my viewpoint, I think renewable would be the first thing which will get launched probably in 2024, and subsequently followed by which I think the infrastructure and the defense play, which would be, I think, forming the larger part of the growth engine, which probably this company would launch eventually for the next round of, I think, next 10 years or so. Because India has already made an announcement, Prime Minister has already made an announcement of 110 lakh crore worth of investment in infrastructure. And that's where probably I think the larger amount of infrastructure related stories will get unfolded in subsequent years. And that's where I believe that the Reliance could possibly lead the direction there too, along with the defense area. So in my viewpoint, I think the future rounds will come from the renewables, storage, infrastructure and defense, if I have to summarize in this order.
Okay. Devin, I'm giving you two questions. Normally people give a question and multiple answers to choose. I'm going to give you two questions. Great if you can answer both. One, what do you think will be the market cap of Reliance in, say, 2030? And secondly, what percentage of your portfolio should be Reliance? Because it's not one company, you know, as we've all been saying, it's at least 6 companies.
So, Lata, great to have these questions from you. Well, I think the second question probably I think is relatively more easier for me to answer. So I think I would go with that. Comfortable to I think keep 15% and above kind of an exposure into the portfolio from Reliance. I think largely the point is that I think if one company is talking of growing the size of the profit every 3 years or 3.5 years, then in such situation, I think it should be, I think, a meaningful exposure in your portfolio. Currently, 1,30,000 crore worth of EBITDA expected in FY23 would be somewhere around 2,75,000, 2,80,000 crores, I think 3.5, 4 years from now. So if that is so, then I think it is making sense to keep, I think, a larger part of the exposure into this particular stock, because you are basically getting the opportunity to double the size of your portfolio in next 3.5 year time. So that is an easy answer. Maybe by 2030, you might see, I think, this particular profit with similar kind of capital expansion that they've been doing in the renewables and the storage would possibly reach in the direction of around 7.5 lakh to 8 lakh crores EBITDA, I think, by 2030. So that is, again, I think, giving you an opportunity to multiply your investment as much, I think, in next 7-8 years thereafter. As far as I think the first part of the question, sorry, I forgot. I think
the overall market cap. How much can your best guess be by 2030?
Well, I think very simply put, I think every 3.5 years, 4 years, I think we'll see the doubling of the market cap from now.
Okay. I thought doubling by 2030 would be your answer. That is even more optimistic.
Devin, you said that every 6 to 7 years, we've seen Reliance come out with a new business or scale up their existing business. So in the next, say, 5 years, right, because new energy has been in the works for the last 2 years, which business do you think they could be targeting, looking to scale up, where they have a footprint right now, but not big enough? What could be the new growth area for Reliance Industries, in your opinion?
So I think, as I said, the renewable story is just unfolding. I think, like in case of Jio, when initially I think they had committed to invest about 1 lakh crore rupees, which subsequently they ended up investing somewhere around 3.5 lakh crores. I think the similar kind of thing could happen in the area of renewables and the storage. I think that probably I would not be surprised if that number goes up significantly. And renewable, according to me, at the start, I think it is this particular investment that they're talking about. Somewhere in 2024-25, when they would probably complete the first round of launch into the renewables area of activity, already I think they would have created significantly large amount of base for taking the next round of expansion. So that figure something which we'll have to wait and see how exactly it comes. But in my understanding, suppose if you are investing 6-7 lakh crores of rupees in this particular area of business, I think once the commercial production start, your payback period should be somewhere around 3 years, 3.5 years, because of the large size project. So obviously, I think if this is the kind of money that they are going to get the payback, significant amount of next round of investment can be expected. I think that would be upwards of $125 billion in subsequent period. And that area could be, I think, connected with infrastructure. That area could be connected with defense. Lot of, I think, the technology-based innovations and the disruptions are also happening in the universe. I would think that I think this is going to be the cue as far as I think the infrastructure and defense is concerned, in which probably larger sum of money would be invested, I think, with a higher amount of technology play at the back.
Well, that's interesting. Deven Prakash, as we look forward, another thing which I think people are going to keenly watch, and I was making this point with Manish, right? I mean, they've got top people, very capable people, and there's management depth at each of these businesses. But there is also now, a broad sense of, how this, in terms of succession, is going to go forward, right? Something you're watching carefully?
Oh, absolutely. I mean, for businesses that which have such a lot of capital outlay riding on the execution part, it's very important in terms of who's actually going to be driving the business. So succession definitely comes in handy. And recently when we saw the 5G launch and the way we saw Mr. Mukesh Ambani actually letting the next generation lead the way right from the time to the Prime Minister was oriented to the new products and the new service. It was so first-hand. I mean, in terms of this, there's no more just an intent. It's actually a lot of content that you're seeing on the ground in that succession happening. So I think key decision-making, the team-building process, acquisition of newer talent, all of that is happening with the next gen in the driving seat to a large extent from what I can make out and read. So it's important for these businesses that succession not only is announced and put into action, but it actually starts delivering. And that's exactly what we are seeing, whether it's on retail, whether it's on telecom. And I'm sure the new energy business, when it comes, the right time comes, you'll probably start seeing some alignment happen out there too. So, it's in financial capital, intellectual capital, human capital, all of that converging at the right time. And succession is all about putting those missing blocks, those building blocks into place. And it's happening. So you will have to watch that carefully for sure. And I'm sure there's much more to come as far as that element is concerned for this large business house.
Okay, we've spoken about all the positives, right? But to every business, there is some of the other risk. From an investor standpoint, Deven, what is the biggest risk you see to Reliance's growth?
So far, I think the Reliance has been extremely successful in delivering some of the larger projects, and at that too in a very precise timeline, and at the most very competitive cost. They have been extremely successful. They have been ahead of the curve as far as their launch of the business it's concerned. This could itself, I think, be a bigger challenge going forward when you scale it up. Because larger the scale, larger the requirement of implementation, and at that point of time, any kind of miss on this particular subject would invite, I think, some amount of risk, that is for sure. So that is broadly generalized. However, I think as I see it in every new generation of business, I think one big underlying risk which continues is the risk of disruption. Earlier days, I think you would have about 7-8 years cycle in the business, after which I think the business would take a change and probably, I think, get into the newer mode. Today, I think that cycle time has reduced to around 3.5-4 years. And I think every 3.5-4 years, I think the businesses are required to reinvent themselves. With the kind of disruption with the technology that we are continuously seeing, I'm not surprised if I think by the time you launch your business, I think already the business model is required to be changed. And this could cause a larger risk going forward. So how smartly you execute this particular proposition, given the kind of risk that you are assuming, I think is going to be the key success going forward. And that's where I think probably successful companies like Reliance will have to lead the path and demonstrate how exactly they will beat these kind of challenges as far as I think the disruption in the business model is concerned.
All right. Well put. Thank you very much, Deven. Thank you, Prakash, for joining us as we take stock and look ahead. Thank you very much indeed. Sonia has walked across back again to the big wall to get us a check on what the future may hold for Reliance Industries. Sonia, back to you.
Well, the last 2 decades have been full of milestones for Reliance, right? So we decided to look ahead to the future. Reliance is committed to investing 75,000 crores in the next 3 years in its new energy businesses, aiming to become the world's lowest cost producer of solar energy and green hydrogen. Reliance will be setting up 5 integrated gigafactories at Jamnagar to emerge as the world's lowest cost producer of solar and green hydrogen. Well, the plan is to become net carbon neutral by 2035. And Reliance will also be starting 10 gigawatts of solar PV cells and module factories by 2024. That will be scaled up to 20 gigawatts by 2026. It was also under the leadership of Mukesh Ambani that Reliance set a record of capital fundraising in FY21. It raised more than 2.5 lakh crores through the rights issue and minority stake sales in Jio Platform and Reliance Retail Ventures to global marquee investors. Now, during FY21, Reliance was the single largest FDI generator for India at a time when most businesses were just struggling to survive. Finally, let's wrap this up with Reliance Industries' commitment to corporate social responsibility. The Reliance Foundation was set up way back in 2010 with Nita Ambani at the helm, and that has so far touched more than 6.3 crore lives and is India's biggest CSR initiative both by reach and by spend.
Okay, Sonia, thank you very much for that. With that, it's a wrap on this special show. Thank you very much for watching. Welcome back, but now you're watching Trading Hour. I'm Reema Tendulkar, with me Sonia Shenoy, and to take stock of the markets and where we're headed next year, we're joined by Ashutosh Bhargav, Fund Manager and Head of Equity Research at Nippon India Mutual Fund. Ashutosh, apologies for keeping you waiting. You know, we were just talking about Reliance Industries and what a great wealth generator it's been. The stock has been compounding at an average of 20% ever since its listing. But I was looking at your top holding at your fund, but Reliance Industries doesn't find its way in the top 10 holdings. Could you give us a reason why?
So, hi. I actually can't talk about an individual stock, but all I can say it's an important part of the index, and we do have holding as it's in public disclosure. But it will be difficult for me to talk about an individual stock.
Sure, got that. Let's also just glance once at the market because we haven't done that in a bit. The Nifty is very quiet, but the good part is that the mid-cap index, the Bank Nifty are holding in the green right now. And a lot of stocks, actually, auto names are all picking up today. Maruti, M&M are all up in the green. Hero MotoCorp is also in the green right now. And Titan is your big mover, up almost 3.5%. Ashutosh, welcome to the show. Happy New Year to you. Just in a couple of days, we'll be, entering a brand new calendar year. How are you feeling about the market now? Do you think there could be outsized gains this year? And what are the sectors that you're bullish on?
Hi, Sonia. We think, the coming year would still be difficult in the sense that we are not expecting a big outsized returns. We think where the global interest rates are and where they would remain means that equity upside in general would be kind of capped. In that kind of backdrop, we are still very positive on domestic-oriented sectors. We still think that yes, India's real and nominal GDP growth would slow, but still would do much better than most parts of the world. And in that context, we are bullish on sectors like financials, industrials, and while we have reduced some bit of our consumer discretionary holdings, net, we are still positive on that theme as well.
So while you've lowered your consumer discretionary holding, what is it or where is it that you've increased your allocation and exposure?
So why we have reduced, because some of these sectors had run up a lot, like retail, hotels, etc. And this is more of a weight adjustment. We have reduced some profit booking in those sectors. Apart from that, we have increased allocation in select pharma names. We were underweight as a house on pharma, so we have reduced some underweight in pharma, and also some underweight in oil and gas name, including the largest company, as you were just discussing before.
Sure. In your fund, you also have some of these names in the defense space, Hindustan Aeronautics, Bharat Electronics, and they've given you great returns this year. Some of them have more than doubled. Would you churn out or would you continue to stay invested?
So we think that the bulk of the rally is kind of has happened, but we still think it's a multi-year theme. So we are not taking money out, but we also think that this perhaps would not be the best time to increase allocation in this particular theme. We think the order books perhaps would, not grow the momentum that we have seen the last few quarters. That perhaps would abate. And in that context, there could be a period of some time correction in these stocks. But from a medium to long-term perspective, I think the localization theme, as far as defense sector is concerned, is a very powerful theme, and we would like to participate in that theme from medium to long-term perspective. But some near-term consolidation cannot be ruled out.
Ashutosh, has IT bottomed out, or do you think it will bottom out? And if yes, if the stocks head lower by say 5 to 10% post the Q3 earnings season, would you be a buyer or would you wait for lower levels?
We think that there is some more downside to the earnings in these companies. So what has happened? Consensus has cut down on the margin estimate if you look at next 2 years. But if you look at the top line estimate for most of the IT names, consensus still is very positive. So we think that there could be some cut as far as the revenue assumptions are concerned. That could happen perhaps in the next few weeks to months, where a lot of these corporates would announce next year budgets. And if there is, this thing pan out, we think we could get a better entry, and definitely at that point of time, we would look to reduce our underweight in this particular sector, because we have been underweight on IT, wherein we have been overweight on domestic sectors like banks, etc.
Okay. All right. Have a great one, the new year that is, and we will speak to you again very soon. Ashutosh, thanks for joining us on CNBC TV18. We'll take a quick break on that note. On the other side of the break, lots more coming up. Very quiet day so far, but lots of stock ideas coming up in a bit.